So we got the new strike proposals, and we put all these proposals out there to Nadex. And, huge kudos to Austin and to Jeff. They're part of the Apex team. And Jeff's one of our lead programmers on NinjaTrader. And Austin is the project manager / figure out how to make everything work better and smoother, keep everything straight and moving forward. And he also helps develop systems and everything else. And I mean, he analyzes stats, helping me build the bull bear thing, go through all that. And so what we did is we went and we were looking at stuff and we were noticing like here's the Russell, okay, before they made the changes. And these are all the strikes on the Russell. But notice what happens, how it ends up staying like outside of the strikes half the time. You couldn't even put on a trade. Right? Anybody ever had that problem? Where you're trying to trade on the Russell or other instruments and there literally is no strikes because you've already went beyond them. Has that happened to you before? So yeah, it's frustrating as all get out, right? Because your system's working. It said go short, but I can't go short, right? And this is the second hour of every expiration. And so these strikes started here. The problem is in the second hour when they're there, when you want those current hours, because we like those, current hours, they're gone. And so they're, 9, strikes, all that stuff. And we're like, we ran the stats and it was running out of strikes. And so we said, hey, let's make them 15 strikes wide. Okay? And let's adjust the widths. Let's make them 1.2 instead of just 1 wide, or 1.4. And this is what happened. Notice how all of a sudden we're covering the price action. Okay? Do y'all see that? So it had poor intraday strikes. This is what's changed. Okay? Now check this out. This is what it looks like now. Okay? And this was the proposal we sent over to them. So it went from this, where they had 9 strikes, 10 strike width, and average strikes crossed, 10 ticks, was 3.31. Well, we said, hey, let's make it 15, let's make it 14 strike width. We actually widened the strike width on this one. We still got the same range because here's what happened, is since we widened the range, more strikes were being crossed. So we still kept our 3 average crossed, but we went to 88% of the time it stayed within the high to low range. So 46% increase of tradable times where strikes are available. All right? And we went down, we broke it down by hour, how many strikes are crossed, how does that change it. The 1 hour we sort of get a dropping, see right there, is at 11 a.m. So, but most of the time it's like at about 90%. So 11 to 12 gets a little bit pushed out because you have the open that can jack things up a little bit. But this is a big improvement they did. Here's the Aussie dollar. Now notice here's Aussie sort of had the opposite problem. Okay, it stayed well within the range, but they're 10 ticks wide. All right, and being 10 ticks wide, you never crashed usually more than 1 strike. So you go in to place a trade, especially you nighttime traders out there, right? And you got like a 5, 95, and like a 50. Like there's no out of the monies. There's no in the monies, right? So, they did, Joseph. Anyways, the biggest thank you they did was actually doing this because trust me, I'm making money on it too, because I can trade more. But you go in and check this out. Like it's not crossing anything, and then we said, cut those puppies in half. But give us 15, because we are winding it out, and then look what happens, how we start crossing more strikes. Okay? And it came out to going from 1.49 average strikes crossed to 3 strikes crossed average per hour. Percent of the time in the range, 93. We went down to 82. We're like, we don't care. Okay? And put all that together. So, yeah, the idea here is to have several contracts constantly showing. And we went through every instrument. S&P, Wall Street, all that. So in the S&P, they had it 2 points wide. We brought it down to 1.5 wide. We bumped it up to 15 strikes. On the U.S. Tech, went from 5 to 4. On the Dow, went from 20 to 12. Small caps, 10 to 14. They haven't done these yet. They did the first level. They'll release the other ones too. Those are still in play. Uh, but then we got all these. So basically, we went through all these, and honestly, complete kudos to Nadex for listening to the feedback and putting all this stuff in play. But right now we have new strikes available. These new intraday strikes. I could go to small caps now, and there we go. Pull that on down here. And notice we don't have 9, we have 15. Okay? We go over to euro dollar. And notice how they're only 4 wide now. Instead of being 10 wide, we brought it down to 4 in width. We go to dollar franc. And we got 4 wide. We go to US yen. We got 4 wide. We go to Aussie dollar. And Aussie, we have 5 wide. Right here. So, and basically what they're doing is they're launching this out. They're making sure it works. They're making sure the system can hold it. And as long as this does increase volume, which we all expect it to, because I'm trading more, so I'm sure you are as well, then what they're going to do is they're going to expand it out to the other contracts. Okay? So again, they've done those 4 FX pairs I just went over. Aussie dollar, dollar yen, dollar franc, and euro dollar. And they've done small cap, S&P, Russell, and Dow. Okay? Or small cap, NASDAQ, Russell, and Dow. They're going to expand it out to the other 6 FX pairs, and to the international indices, and out to the commodities. So this is like stage 1. Which they got done literally within a few weeks of this proposal coming out to them. So, which is pretty impressive. And so, hopefully we'll be seeing round 2 get kicked out, I'm hoping, within the next couple weeks. And that they'll knock out the other FX pairs. And you ought to notice it when it starts happening. You'll probably notice it in the demo platform first. Because they'll put it in the demo platform usually for a week. And then it'll pop into live the following week. So if you're in demo and you notice, like, say, pound dollar has a smaller strike width all of a sudden, that means we got another round coming out. And, but anyway, so let them know how much you love the new strike widths and the additional strikes being added on. Because we want that feedback coming in to encourage them to do it on the rest of the instruments. Okay? But this totally changes how you get to trade on Nadex. I mean, it is a literally complete game changer. Because you can come in now and do this. As far as giving feedback to Nadex, you can email customer service at nadex.com. You can put it in my account. I do it in your live account. Don't do it in a demo. Either email customer service at nadex.com, or under your account, go to my account, and then click on message us. And you can send them a message right from there. Or if you're calling them for any reason whatsoever, just let them know. Say, hey, let your manager know. We love this. I love this. Whatever. But, I mean, it literally makes it so much better. Because now you can have like an in the money, at the money, and out of the money. Not just an at the money, or not just nothing. Great question that comes up by Kelly. Do the market makers like this as well? Yeah, this actually helps everybody. That was part of the whole proposal. Of course, Nadex makes more fees because we're going to trade more. Because if I can't place a trade because there's no strike, they don't make any fees, right? And I want them to make fees. I want them to make lots of fees because I want them to be successful. And I want them to add markets. I want them to expand contracts out. Obviously, you're in partnership with them, right? You're in business with them. So they're your exchange where you go in and buy and sell your contracts. So they make more fees. But the market makers are able to lay off risk. Because what happens when all the strikes run out? Right, if I go back over here to the proposal, and let's go back up to like that small cap example I was giving you. And they went in, and somebody went in, and let's say they threw a whole bunch of, like this hour right here. Let's say if you go in or Yogi, right? He throws on like 400 contracts short on this right here, on this bottom strike. And it flies down past it. The market maker can do nothing at this point to hedge themselves if they haven't been able to lay off the risk already. Okay? But now when this happens, well, they got more traders coming in, more traders buying, looking for bounces, all that stuff. They can start hedging off risk. So they have traders buying, buying, buying as things are going down. So as the short profits and Yogi like cleans up, then they're making money on the traders that bought the out of the money, thinking there was going to be a bounce here, etc. Okay, so it's very good for the market makers. It helps them hedge off risk, which is good. You want the market maker to be healthy. You want them to make money on the bid offer spreads, and the more they can make money on the bid offer spreads, the tighter the bid offer spreads become. The more they can't lay off risk, the wider those bid offer spreads have to become to help cover their risk of not being able to hedge off a position. So, as we trade more as traders, the market makers are better able to lay off risk. As more strikes are available, then more trades come in on different strike levels, they're able to better lay off risk. As they're able to better lay off risk, they tighten up their bid-ask spreads. With more strikes, we're able to do more trades. So higher liquidity and better laying off risk for market makers equals tighter bid-ask spreads over time as it picks up. So this will actually end up helping us tighten up the bid-ask spreads. Let's see here. So I don't know if it's smaller now. I honestly haven't been paying too much attention to it because to me it hasn't been a big deal as a trader. But let's see. Right now it's like 7, or sometimes it's been like 10. So that's actually pretty good comparatively. But it's not going to happen like overnight. Like they have to see consistent volume, right? Because they're basically saying we'll take on more risk by making a tighter bid-ask spread because we believe we can lay it off. So as more traders come on. We have an article like we just pushed out that ought to go out to Benzinga and Yahoo Finance and Morningstar and all those other fun ones, sort of starting to promote this. It's sort of funny because as I teach, people are like, why do you teach Nadex? I mean, one, I become a better trader the more I teach other people how to do it because I have to analyze things in 100 different ways. But two, I mean, it's a newer exchange. And it's not brand new. It's been around for, 5, 7 years. I have no idea, a while. But as the volume goes up, the bid-ask spreads come down. I mean, look at this. By the influence I've had, we got 7, almost. I think we're almost at 8,000 now. At 7,800 traders at Apex. That gives us a big voice to be able to say, "Hey, can you change these strikes?" So it's sort of cool because we're getting to, as a community, help shape this exchange to meet our needs as traders. And I don't know, I'm just excited about it, and I wanted to share with you sort of where that came from, what it means to you as a trader, and why it happened. So, let's see here. Gold spread. You talking about binaries or spreads, Edward? Oh, Edward just logged off. Okay. Let's see here. Let's see. Yeah, I know. When they go global, it'll be huge. So these are good steps for it because this will make more liquidity, more contracts, all that. And eventually, we actually want to get this expanded to 21 contracts on intradays, and that's our goal. But going from 9 to 15 was pretty massive, and the market makers are taking on all this additional risk by layering this stuff on. So we had to ease them into it. And again, as they lay off volume, they'll take on more contracts. And then we also want to rewrite the dailies and the weeklies. And we want to rewrite some of the spreads themselves. So some other things that are coming down the pipe. I know they're working on debit card deposits, which, to me doesn't make a difference. It's like check, debit card, it's in the same place. But some people want that. And then I think another thing they're adding in, this might even be in effect now. I have to test it. But they're supposed to start setting the strikes based on 5 minutes before expiration. And I think that's already in place. I gotta check it. Or before the contract starts. It used to be 10 minutes before. So I just need to go through and test and see if they put that in place now. But let's see here. Yes, we can definitely do that. Let me capture that so I'll remind our publishing team to do that. Okay? He was just asking if we could put all of our new articles out there. So one thing we do is we actually post them now inside of the forum. There's a whole article section over here at the bottom. So then you can see the U-Factor series we just put out, Trading in the Dark Zone. how you can stay one step out of the markets. So we do put them over there. There's also an articles section right here. Go back to the forum. And we need to make a bigger button for that, don't we? But so like here's like a whole bunch of articles that we post in. A lot of people don't even know they exist. But anyway, so yeah, so they're right there. But yeah, we'll go in and start doing that. But we post them all in here. So what else do we have going on? Just trying to look through all these different things. So Edward, I don't know if you're back on, but if you are, let me know, and I'll be glad to figure out what your didn't quite understand what your question was. Yeah, Nadex Pro. Scott was talking about Nadex Pro, the new platform. It's got a long way to go. It looks really cool, right? But it makes your eyes want to bleed. So they really got to figure out how to clean that up. We're considering making our own Nadex platform that's trader driven. Sort of like think of a Thinkorswim for a Nadex almost type idea. So we're actually looking at that now. And we have all the... Yeah, I mean, you can't do it live anyway, so it's only demo right now, but it's just... like the easeability to pull things up, the clicking everywhere. I mean, it has some cool looking features, but they're just not... It wasn't developed from a trader's mindset. But yeah, just trying to make things easier and easier. We have the new scanner we're working on. That ought to be released here shortly. And Scanner 2.0, totally different look and feel. And we've got the new site being released. We got, of course, Ninja being done, but the platform may be the next big project we start hopping on after that, just to figure out how to tie it all in together. And we're like Metastock's looking at data feeds for us, IQ feeds looking at data feeds for us, putting them in there. Let's see. Okay, well, those are basically the new big announcements. So that basically it'll make trading Russell a whole lot better. So if you've been hating Russell because the strikes always run out, now you can come on back to Russell. And basically any system that you may have had trouble finding strikes on, this should, obviously it's not going to eliminate everything because the strike's still too far away, that doesn't matter, but this should make it a lot easier for you to be able to pull that off. ZS has lots of strikes. Have they expanded that one already? Not to my knowledge, but... Oh, we didn't rewrite ZS because it doesn't have intradays. This is only an intraday rewrite. So, after we get all the intradays done, then I gave them like 10 proposals of things to change. I wanted them to expand the hours on like just about everything. So, like nighttime indices, nighttime commodities. So, we literally have about 10 proposals. This was our first big, where I get this done, and then get this done, and then get this done, and as you do these things, volume will go up, 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 up. So, I mean, it's really much a win-win-win. Market maker, the hardest thing on expanding like contracts out to nighttime on indices and commodities, you have to have market makers that can easily unload that risk. Because they don't just unload risk on Nadex, they'll unload risk on other binary platforms, or they'll unload risk on options on other exchanges. So they have to be able to unload the risk. And that's, as you understand sort of how things work, that it's not just some guy on the other side of a trade, but I mean, it's maybe a few guys on the other side of a trade, right? And they're working together, and what they're trying to do is figure out how to unload risk. Put yourself in their shoes. You got to be able to figure out how to unload that risk if you're going to take on that market as a market maker. So we have to sort of work with the reality of what trading is and how it works to be able to put it all together. Is it possible for a market maker to take a bath in the market? Anything's possible, but the reality is, like, the market makers that are making markets on Nadex are massive. I know, like, the MRM, the head market maker on Nadex, the one that's been there the longest. I mean, 3% of their volume is Nadex. Okay? So, I mean, they could get destroyed and they still have 90% of their volume elsewhere. Part of the parameters you'll see where you may see a limit on contracts is to make sure they don't take a bath. Okay? So basically, they need to know that the volume is going to be there to unload contracts to take on trades. That's why they're not going to go list 5,000 contracts. Doesn't mean you couldn't step into 100 at a time over and over all day long. But, they're not going to make it a one quick easy. Now, I've seen it where you can do massive trades and they'll take them all. So, if they believe they can unload the risk, they'll be all about it. But, I mean, they're smart. They know what they're doing, and, they're not your enemy. They are I actually have a whole article on why market makers are good for you. So, now, sometimes they get a little stupid, okay? I'll definitely say that too. But they sort of piss you off. But if they get a little greedy, then I just back off. They don't make anything off me. So, but, I mean, like right here we got euro dollar. These are 5 wide, So, I mean, that's great. So they're tightening some stuff up. But yeah, so Darby, to answer your question, indices at night isn't just about us wanting it, it's about them being able to weigh off the risk. So there's not a whole lot of option activity at night on the S&P for them to weigh the risk off. There's not a lot of activity, period, at night. So FX is a whole different story, right? There's a lot of activity happening on FX. It's very easy to lay off FX risk in such a massive market. So either there has to be other markets, other derivatives they can lay risk off of, or really risk off to, or there has to be enough volume by the traders themselves that they can lay off risk and they can buy from you when you sell, and then they can sell back to somebody who's buying. They can basically make the bid offer direct. So, I don't know how many traders they have, so I don't have access to any of that information. You could probably ask them, they might tell you. I mean, the last time I checked, it was a long time ago, but it was like, 10,000 or something. I don't know. But I'm sure that was a long time ago when I asked. I know they doubled year over year last year. So they're growing really fast. And I think they grew 400% like in the first quarter compared to the previous quarter. I haven't seen the growth stats for this last quarter. I haven't looked them up. But they're growing like crazy. I know that. Okay, cool. Well, the main announcement there, I just want to let you see the benefits there of the strikes. So enjoy that, and let them know that you enjoy it so they'll expand it to the other markets.